G'day folks, welcome back to Pete's Investing. It's February 22, 2024. This is the Nat Gas price update. So just be mindful, we're still in a very bearish decline on the natural gas price, but we've hit a bounce and it's bounced higher beyond some key areas in the lower timeframes. Now, as well, we're also including a new indicator which helps identify tops and bottoms. And also here's some news, latest news from FX Street. Natural gas soars over 10% with the Chesapeake to cut production, tightening global supply. US dollar weakens, potentially aiding demand. Possible Fed rate hike adds uncertainty. The natural gas imports boost European stockpiles. And technical analysis suggests further upside with key resistance at 186. And downside risks include supply of fading or of headlines. So first off, we've got the natural gas commodity price. Here we've got the weekly, the daily, and the hourly. So on the weekly, first off, you can see we're still in a bearish momentum according to the ADX. The CCI 150 is also trending in line with the price. There's currently no divergence. And for those new to the channel, we do track these divergences. There was a bearish divergence back here versus higher highs on the price. There's two of them here, actually one divergence there up to there, then it fell off, and a second one up to there, and that fell off as well quite severely. Now we're also using these arrows, these blue and red arrows, which indicate potential tops and bottoms of the chart. So at the moment it indicated a lot of blue arrows here, which we expect to see a bounce. Now it's actually fallen from there, so they're not necessarily an area to buy. It just gives you some probabilities on the time frame. So this is on the weekly. On the daily, likewise, we've got a bearish outlook. Now on the divergence side, we do have a bullish divergence there on the CCI 150 versus lower lows on the price, and the price did bounce from there. And we've also got those, you can see those blue arrows picking those bottoms, and it has bounced in those areas. And you can see back here some red arrows bouncing to the downside. So these actually are pretty accurate in terms of picking tops in those little ranges. Again, it doesn't mean a long-term reversal, it just means a potential bounce. Now we don't know how far this is going to currently bounce, where we're seeing a bounce now. On the hourly, again, you can see another bullish divergence here, and that's independent from this one. We've got a bullish momentum on the ADX 25, bullish divergence on the CCI 150 versus the price, and we're seeing this bounce again. Now you'll notice I've taken it back, Fibonacci, back to that recent high, which before the that divergence started. That's where the minimum range I'll take it back to. And you can see there it's broken up past our minimum target range. And if I draw a target range, which is the 23, put that there, 23 to the 38% level, it's gone broken through there, and it's currently resting around the 61%. Now that 61% is key, because if it breaks much higher than that, and much higher than this resistance at 186, we're going to see further upside. So at the moment, that's key in this area. But notice also, we've got a bearish arrow, which indicates a potential for a decline. So just be careful about going long. If that red arrow wasn't there, it'd give us a bit more confidence in going long, but at the moment, this is a key area for resistance. Now, in terms of Fibonacci retracements, they're a bit subjective because you can take them back to previous highs. So for example, each one of these areas, you can see it's actually broken the price. If I just put it to there, for example, you see the price is actually still broken through that minimum 38% level. So again, these Fibonacci retracements can be subjective. If I pull it back to there, it's still hanging around the 50% level, or even if I took it up to that point, it broke up past the still at the 38% level. So I don't get too aggressive with those Fibonacci retracements. I normally take it back to the previous high before that bullish divergence started. So that's on the natural gas price. Now another topic I want to discuss as well, before I move on to the ETFs, is I get questions all the time, where do I set my targets to take profit, and where do I set my targets to enter the trade? What I'm showing you here is basically the trends on the long-term, medium-term, and short-term timeframes. A couple of things. I'm showing you the 1 hour here, and the daily, as I said. You can trade on the 4 hourly or the 5 minute. It's up to you. It's really a personal idea in where you trade. If you were to trade, for example, in the lowest time frame as a 5 minute, I'd be looking at the 1 hour or the 2 hour time frame above that, or even the 4 hour, to get a general trend of direction before taking those trades. If I was trading on the 4 hour time frame here, I'd be looking at the very least the daily, if not the weekly. So again, depending on your strategy, try and choose at the time frame you're trading, choose a higher time frame to base it on the direction or the trend, to follow that trend. Secondly, in terms of taking profit, again, there's various ways of doing this. So for example, looking at it here, in terms of entries, there's thousands of ways of entering a trade and there's thousands of ways of exiting a trade. It's really a personal preference in what you do. Again, I'm giving you the trend you should follow. So just, I'm not going to dictate what you should do. I'm going to leave it up to you to make your own decisions and whatever you believe is right for your risk strategy. So for example here, taking short positions, you would have gone short based on the daily. The ADX has given you a short signal, and plus, and back there, the weekly is giving you a short signal as well. So you would have gone short when that candle breaks below the exponential moving 9, and also these moving averages, which we demonstrated, and I'll put out a video that's attached in the description below. When it breaks below those moving averages and the exponential 9, then you take a short position there, and you exit the position when the candle breaks above, or closes above the exponential moving 9. Okay, that's one entry and exit strategy. You don't have to use that, just an example. Of course, it's not bulletproof, it's not 100%, for example here. And again, I like using all these other indicators as guidance. Now you'll notice here it's showing you all these long arrows, these blue arrows. So again, it's a bit risky possibly, but try to combine the trends, i.e. the ADX, the CCIs, and these moving averages on the price chart, combined with these arrows that I demonstrate here, for example. That would have been a safer place to place short positions because those red arrows show that. Here it would have been a bit risky to go short during this period. There's no red arrows there. But notice on the lower time frames, that period there, on the lower time frames, on the hourly, it's showing a lot of red candles in that lower time frame. Sorry, red and blue arrows, I should say, not candles. So just be mindful on whatever strategy you use that suits your trading strategy. So next we're going to go to the ProShares Ultra DJUBS, the ETF, BOIL. That's showing a bearish momentum on the ADX 25, a bullish divergence on the CCI 150, and we've got a few bullish candles. Again, careful about going long because we're still in a bearish trend. On the daily, bearish on the ADX 25, bullish divergence here versus the price. And again, I would take, what I've done here, I've taken the Fibonacci back to that high, to the previous high before that. That's a bit of a stretch, but again, that's just a target area I've put in there. Let me just draw the Fibonacci for you. So again, that goes back to that previous, before that divergence started. And I'll take it down to the lowest candle, the recent candle. That's that point there. Now, for this divergence to fail, we need to see the price obviously fall, in which case we may see the CCI 150 fall as well. And if that, we can allow that CCI fall, but as long as this trend, it can drop down to about there or even a double bottom down there. If it drops much further, then we're going to invalidate this bullish divergence. And if that falls down below that point there, I dare say we're going to see a very steep decline in the share price. So just be careful about taking that a long position yet. Again, I'd like to see this break probably above these moving averages. The CCI 150, for example, here is broken above its moving average, so that's a positive. I'd like to see this break above, similar to what it did back here for that, the price chart, to break above the moving averages and above the exponential moving 9. So that's the daily, and on the hourly, likewise, we've got a bullish divergence there versus double bottom down here. I've got a lot of blue arrows and actually bounce from there. And again, if I was going to draw the Fibonacci retracement between that low and that high, you can see that it's punctured and broken through the 38%, and it's actually resting at the 38% level now. So again, I always use these Fibonacci as the closest range to measure, and that's my target of a potential trade if you want to take that trade. But again, it can be a bit risky as long as it bounces. In this case, it bounced quite substantially. Next, we've got ProShares Ultra Short Bloomberg Natural Gas, KOLD. The weekly is bullish. The weekly CCI 150 is also bullish, in line with the price. The daily, you can see there, it's showing a potential break above to become bearish. We've got a bearish divergence here on the CCI 150 versus higher highs in the price, and a pretty steep decline on the price, on the share price. On the 1 hour chart, bearish on the 1 hour, pretty steep bearish. You saw that there was a bearish divergence there versus almost a double top on the price, and that again, it plunged quite substantially. Lastly, we look at United States Natural Gas Fund, UNG, bearish on the weekly. That's probably a bullish divergence on the weekly CCI 150 versus lower lows on the price. Let me just mark that. So back from there to there, that's bullish. You can see there quite easily. Similar range of chart movement. That's bearish. That's bullish. That's a bullish divergence on the weekly, which is a somewhat positive sign. On the daily, bullish divergence versus the price, and that's already started to bounce. And I would take that back to the Fibonacci range, to that level there, if I was going to trade that or put in targets. On the hourly, bullish on the ADX, bullish divergence on the CCI, and again, double bottom on the price chart along with those blue arrows at 1465 support. Just a few bullet points on the latest natural gas analysis. Some storage levels. While currently comfortable, significant withdrawals from winter heating could tighten supply. Ongoing tensions in Ukraine and potential disruptions to natural gas exports could impact global supply and prices. And continued cold snaps could further push prices up, while milder temperatures could bring relief. So again, the overall trend is bearish, although we have bounced quite significantly in the last couple of trading days. But how far it goes, we're not sure. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Support us more on the Patreon page, where we also do weekly scans of stocks and other instruments. Thanks for watching, and see you in a future video.